So it's Tushar Mahajan who joins in right now to speak about what's happening for the markets at large and the derivative space in particular, considering its expiry. Tushar, great having you. Thanks for joining in, particularly this all-important week of expiry. What's the broad view on how the markets behave on two counts? One, the policy tomorrow, and two, the expiry this Thursday.
I think we are now beginning to see action build up ahead of the expiry. With the rollovers on Thursday, we are beginning to see action pick up on the rollover space. Though there is definitely some nervousness ahead of the RBI policy tomorrow, and how that impacts the local interest rates and those kind of things. And as a result, the cost of carry today has been pretty stable. While the market's been pricing in 25 bips repo hike and about 25 bips cut on the MSF, I think if there's any kind of deviation from this level and there is a movement in yields, we'll accordingly see a move in the cost of carries as well. So ahead of the policy today, the rollover quantities have picked up, but the rollover costs are pretty much stable as versus what we saw on Friday as well.
In that light, Tushar, how are you positioning yourself in the banking space?
I think what is happening in the banking space that over the last week or so, it did see a reasonable amount of run-up versus the broader markets as well, and there was people who were building up positions. But 11,000 on the bank Nifty seems like a tough resistance to surmount, and I think we're seeing a bout of profit booking there. But within the banking space, we continue to position ourselves more on the long side with the private sector banks versus the public sector banks.
Of course, the Bank Nifty has been fairly rewarding this month. That's an 8% gain coming in. What is your broad sense, Tushar, stepping into the month of November and into the new series, given that we'll be starting off with Diwali, on where does the market go from here?
We've had a good run in this month. We've seen the markets kind of consolidate well around their gains as well. 61.20 was a very critical level, which we were trying to surmount for almost all of the year, and 3 attempts at that, and we couldn't close that. Then we also managed a closing around 6,200. I think so. The internals definitely have been encouraging. What we've seen over the last 3-4 days is that markets kind of giving off some of its gains in an obvious round of profit booking right now. But the good thing is that in terms of overall activity, volumes haven't really been very stark on the fall, and at the same time the magnitude of the fall has been very, very gradual and not stark. So I think overall the trend is still up. We could see the markets take some support around the 61.20, 6100 odd levels, which it has broken intraday today. But that's about it. Maybe we'll take the next round of support I see is around the 6,070 odd levels, but small supports, and we could gradually inch higher. So I think on a month-on-month basis, we could probably see the November series also opening up with a reasonable open interest, and some positive gains for the Nifty as well in the month of November.
Some micro and specifics, Tushar. FMCG has been extremely active today, and most of the numbers, HUL was good and therefore the stock reacted duly. ITC and Colpal not so much, and they've reacted duly too. What kind of positions would you advise on the FMCG space ahead of expiry or for the new series?
I think what we are seeing on the FMCG space is that there has been a gradual pulling off of positions across the sector, given the kind of run-up that it has. And, ahead of the expiry also, we are not seeing too much expansion in the cost of rolls across, HLL and ITC in particular. And ITC had a reasonable amount of long positions which were built up. And I think we've seen some shedding up of that open interest today. And we are seeing people adding on to more short positions in ITC after the results were reported on Friday. So I think overall, in terms of positioning, we would probably see relative outperformance in HLL versus ITC, primarily on the back of results. But broadly on the sector, we continue to see some kind of pullback.
Couple of other questions before we let you go, and again specifics out here. I would want you to probably give our viewers an idea or two here. But two stocks which are very active, Tushar, the last couple of days. One is Adani Enterprises, strong OI action, strong price action, and the other one is the new kid, UBL, which has just been added to the F&O space. Have you looked at both of these specifically?
So I think Adani Enterprise in particular, the group as a whole has been doing extremely well. We've seen some big positions build up. There's not so much of news flow in terms of what we are seeing per se, but I think from purely technical factors, the stock looks like it's going to kind of continue. It's going to lead the group companies, and it's going to continue to lead its back. I wouldn't be surprised if you see kind of 250 odd levels on the stock over the next few trading sessions as well, given the underlying momentum on the stock. UBL, I haven't really seen the stock per se, but I think it's really just the joy of getting entry into the F&O space and the kind of position building initially that we have been seeing in stocks. And remember, we've seen new stocks coming in after a fair bit of time. So we'll probably see some of that joyous momentum kind of continue for a bit.
Tushar, before we let you go, and if you can share, if you are at the liberty to share, maybe an idea or two in the run-up to the expiry.
Well, I think in the run-up to the expiry, given the fact that we do have a big event coming up tomorrow, I think it's best to probably have yourself in terms of neutral trade ideas, market-neutral trade ideas, and probably keep trading sectoral stuff. So I'd like to, suggest looking at, long IDFC kind of a pair versus short the HDFC Bank. We've seen a good chart on IDFC. There's been reasonable amount of support coming in at the 100 odd levels, and the stock tries and makes an attempt beyond 100 to 104 and has been coming off. So I think good consolidation in that name. We could see some momentum coming up there, and HDFC has been trading a bit iffy ever since it reported its numbers, and I think there could be some more short side pressure on that. So I think that's a trade which is definitely worth looking at.